What's up, everybody? It's your girl Erica from the Classy Climb blog. Thank you guys for being here tonight. And you know how we love to kick off the show. Drop your city and state in the chat so we know where you guys are coming from. You already know who I am, but if you don't, I'm Erica Williams, author of Smartphone Millionaire book, How to Invest in People, Businesses, and Real Estate from the Palm of Your Hand. But we got a really special guest on out here. This guy right here has been cracking me up via TikTok, via Instagram. And I hate to be like the dude with the towel on his head. You know what I'm talking about? But I love the tax knowledge you be dropping. I love how you're sharing with people in a fun, creative way. Please introduce yourself to the audience.
Hi, thank you. Hey, that was such a nice introduction. Thank you so much. Yeah, guys, my name is Duke Alexander Moore. I am a QuickBooks Pro advisor and an enrolled agent. So pretty much what that is a tax professional. I specialize in tax planning and helping entrepreneurs reduce their tax liability. What was just mentioned before, I've used social media platforms like TikTok to engage with my audience more. So I really make creative videos to teach tax law or tax rules or tax strategies that can help you actually save on taxes in a very fun way. So that's who I am.
I love it. Listen, you guys, he has, people already know. They said this is the guy who spoke on Schedule K's on TikTok.
Yeah.
And so I love the creativity of it. I love how you just mix it up. And I think it's smart. I think it's a smart move. And like, there's a lot less, let's call it barrier to connect to people. You know, Instagram, Facebook, algorithms all doing these things, but TikTok, they like throw it out there, get crazy. Right. What made you do it? What made you put the towel
on? So here's the story behind the towel. So I was always trying to find ways to engage with my audience. And, I've Googled things, how can I be more creative and things like that. So one of the things was like always use a prop. So I'm like, how can I use a prop? So I remember with one video I had, I'm not sure if you guys are familiar with OnlyFans, but I was like, let me, use some type of prop. So I just threw a towel. I'll be honest with you, I wanted to use a wig, but I didn't have a wig. So I had to improvise. So that's why I used the towel. And then so many comments came in with the towel, and it was such a hit with the towel. I was like, well, might as well keep this up. So I took what worked and I just used it again, and I continue to use it. And it's worked out for me pretty well. So that's the story behind the towel.
So I love it because we're in 2020, year of the murder hornet, year of the zombie apocalypse, year of some people gonna go to jail for their taxes. We're in the crazy year of 2020. Right. And I love that you're bringing like clarity in the sea of, let me tell you this tax strategy. Yeah. You're like, wait, don't be making up rules out here. So when someone says they're QuickBooks Pro certified, like what does that mean? Like, is it a long program?
Yeah, so there's two types of programs when it comes. It's QuickBooks Pro Advisor and QuickBooks Advanced Pro Advisor. So I'm actually advanced, and so 2% only passed the advanced certification. So I'm part of that, phenomenal 2%, which is
2%, man.
Yeah, it's very difficult. So yeah, the Pro Advisor exam itself is very. QuickBooks has a free program that allows you to train and get to it very easily. I mean, if you guys are out there, you want to start a bookkeeping business or something along that line, I would advise you to go through the QuickBooks Pro Advisor program. What's neat about it as well is that QuickBooks puts you in their directory. So oftentimes people have problems with their QuickBooks, and they can just click a link like, hey, find, a QuickBooks Pro Advisor near me. Oh. So these QuickBooks will send you leads directly instead of you having to go out, do marketing, and so forth. So that's kind of the Pro Advisor program for you. Yeah.
I like that. Was it expensive to join it?
No, so it's free. So the Pro Advisor, you just have to put in the work of studying it and getting it down. What's also neat about it is QuickBooks will give you, your company, a free QuickBooks profile so you can use for your company. So QuickBooks is typically, starts off around $15 a month. It can go all the way up to I believe $150 $150 a month. So QuickBooks gives you that the best of the best version for your company.
Mhm.
And then it also lists you directly. The education is free. The only thing that's required for you is that you just, put in the time. If you have a full-time job right now, just do it on the weekends and do it at the end of the day, put in that work. QuickBooks will issue that directly, give you a free program, and it's all completely free. Yeah.
Oh, okay. Look, people like free 99 in the chat. Yeah.
Yeah. Free. Yeah, it's free. So the education is free, and they'll send you leads, which is even neat. And yeah.
So I love it. I'm going to name off some of the cities, and then I want y'all to come in here and drop some of your tax questions. I know some of y'all messaged me in the groups and in the emails, but I couldn't catch them all. So we got Virginia Beach in the house. We got Cary, North Carolina, Charlotte, Atlanta. And again, somebody already said, is this the guy? Yes, that is the guy. Yeah. We got Ohio, Boston, Massachusetts. Part of social media, people are like, I need to spend all this money on ads. I need to spend all this money. And really, the truth is, you just need to be bold and get out there.
Right, absolutely. TikTok gives you the opportunity to put yourself in so many, like you mentioned before the slide. It's a different platform, and if you guys are thinking about doing it for business, it's best to get into it early. Like for example, like your views will be higher now than later, because for example, like the average views on a YouTube video, like back in I want to say like 2008, 2010 was around 6,000 to 10,000. Now, since it's becoming oversaturated, the average views on a YouTube video, if you're just getting started out, might be 100 views. So, if we just take that thought, like, hey, if we would have gotten YouTube early, we would have a lot of subscribers now, more views. But since it becomes oversaturated, it's best to start early. And that's why, I encourage anybody who's in business or entrepreneur, hey, attack TikTok now. Get in there early, because eventually it can become oversaturated, and it'll, it's just more people. And so you have to become more creative in order for you to push your content out. So yeah, I absolutely recommend TikTok. It's early, get into the games, and I absolutely recommend it.
Well, I'm going to show people, just for people who haven't seen your videos, just a little snippet. We're not going to go too crazy.
Okay.
I think it's important because people are like, hey, what does that mean? So Let me show you right here, you guys. I'm share the screen. This is his Facebook page where you can catch him. But let me see if it'll play. Hold on, let me see, make sure. Before I start telling people to look over here. Can y'all see that? Put a 1 in the comments if you can see it. If you can't, let me know. I'm gonna make it bigger. Let me see if I can.
Yeah.
Let me see if that did it. Oh, let me make it back smaller. Maybe that's what. Let me go back. Of course, when you want to show somebody something.
Right. It's crazy.
That's how the internet do you.
That's when I go live. If you guys go on TikTok and you search tax, it's the first video that comes up. So which is neat about that as well.
So I like it. You switch it up. You got the do-rag on here. You're number 4, number 5, giving numbers, 8 benefits of owning a small business. Are you surprised how people responded to it?
Yeah, absolutely. And absolutely. So, as a tax professional, I've always thought, first getting started, that I have to carry this, professional persona all the time in order to increase comments, increase engagement. But when I notice I'm being myself, especially on TikToks, it's a lot more engagement. So yeah, I've noticed a big difference. So yeah.
So these crack me up because like you're at a Buc-ee's.
Yeah.
You're just enjoying stuff.
Right.
File Schedule C, when your net sales as an owner operator becomes $400 or more. Schedule C.
So like I'm gonna hop into it, and they asked, are you on Instagram as well?
Right.
Are you on Instagram?
Yeah, Duke Alex Moore _. Yeah.
We're gonna make sure everybody can see it. Everybody. Duke _.
Duke Alex Moore.
Oh, I think
that's top one.
Yeah. Make sure nobody's out there, following your page, making a mock page.
So that's the Instagram. Yeah.
I love it that you're having a good time. That's the best part of it. Is like, as y'all can see the towel.
That's a towel that took off. So yeah.
So what are some of the biggest questions you're getting this year as far as, because I think people are all like, oh my God, I took this unemployment. You know, what happens? You know, do I have to pay all this taxes on unemployment? What are some of the biggest questions you're getting as far as this year?
Yeah, so people are afraid of the unemployment. So that's really a hot one, especially the unemployment. Because, you know, and it's okay. You know, we didn't know, or some people didn't know it was taxable at first. All we're thinking, hey, we need this money. So what I'm advising a lot of people, because this did happen during this crisis, is that a lot of people have started their business, right? They've started the business while unemployment, which is totally fine. You can use your unemployment, you know, income to start a business. And if you didn't have taxes withheld, you know, when you start a business, most of these people I'm talking to, they're operating at what we call a loss. So the neat thing about operating as a loss, because it's expected, you know, it happens, you just start a business, is that you can use your business loss to offset your unemployment income, which you're afraid of paying taxes on. So a lot of questions that I'm getting right now is, hey, unemployment, you know, also how to start a business. What are the best practices? Guys, if you're watching this, you're a business owner, I always recommend get started with bookkeeping. That is really important, especially you want to talk about when you know, how to save on taxes. Bookkeeping is really important. So those are kind of the common questions that I'm really getting. I go live on TikTok, 8 p.m. Central Time, Monday through Thursday, and I answer all those questions there.
You know, the biggest thing is I think people are, I'm going to go through some of the questions here and then I'm going to come back to what I was thinking. Tia Griffin said, I screenshot the information. This will be my first year receiving a Schedule K and your breakdown was so easy to understand. Thank you, sir.
Thank you so much, Tia. That was really nice. Thank you. I love nice comments and feedback. That's what really motivates me to keep going.
You know, you just never know who you're reaching out here.
Right.
All right, next one is, what are your thoughts on the share economy and the current tax code? And you guys, he had some really great videos on the share economy, but go ahead, you break it down.
And what do you mean the share economy?
I hope he means the gig economy.
Yeah,
I'm thinking, you know, expand in the comment section.
Right, I'm thinking the gig economy, and if you're talking about Prop 22, there's legislation passed in California where they're trying to reclassify the gig economy workers as employees. Fortunately, that didn't pass, so they're still contractors. As far as the gig economy, the gig economy is really great, especially during a time like this, because you know you can just go out there, get the 1099, and you get paid. You know, you don't really have to apply. But everybody in the gig economy, you know, unfortunately, we're going to have to pay taxes on that income. So what's really important if you're in that gig economy is that you track those expenses. The income is going to be reported to you. You're going to get that 1099 by January 31st, 2021. So the income part's taken care of. But as far as your expenses, you want to track that, especially your mileage. So if you're doing something like DoorDash or, you know, Uber Eats or Uber itself, your biggest expense is going to be your miles. So especially people in that gig economy who's doing the ride share economy. Yeah, you're going to want to track those miles. That's going to be your biggest expense. It's going to nearly wipe out your income or greatly reduce your tax liability. So please track your miles. If you have a hard time tracking your miles, typically there's an app, but what I recommend all my clients to do is, hey, go ahead and get some type of maintenance or oil change at the end of the year. So let's say it's December. So that way, when you do it the next year, you have your odometer reading accurate, because every time you get something type of maintenance, there's an odometer reading. So if you make it, kind of habit to get that at the end of the year, well, guess what? You have your beginning and ending odometer reading if you fail to track your miles. So that's a good tip that I like to give all my clients, especially if you have trouble.
That's really good. Yeah. You guys, January get that odometer reading, and December get that odometer reading.
Right. Yeah.
One of my biggest claims to fame on here is that I was working one job, and then in the hot Texas sun, I was delivering pizzas, making like $2-3 grand a month, and I used that money to invest in like all these different Robinhood apps and Lending Club and everything you can think of. And I would go in there and they would look at me like, I'm sick of you bringing your paperwork in. But I had a blast. But I think it's so important because a lot of your questions I see you do on TikTok are like, Hey, I made $6,000. Do I got to report it? Yes.
Right.
Hey, I made 10K. Like, oh yes.
Right.
So it says Charles Williams or C. Williams. Will the $1,000 credit to small businesses need to be paid back or accounted for?
So they're talking about the EIDL, so the economic impact disaster loan.
Mm-hmm.
So that's what. Okay, so everyone, if you had a small business that was in operation 2009, if you guys don't know, they're talking about the EIDL loan. So if you got that economic impact disaster loan, and because you had an operational business in 2019, pretty much what it was is if you're a sole proprietor or a single owner, you get $1,000. You also get $1,000 for each employee you have in your business for up to 10. So that is not going to be included as taxable income. So that's what the legislation is right now. That's finally what I'm hearing. Things could always change, but from what I'm knowing, no, it's not going to have to be paid back or accounted for.
Did you do anybody's taxes this year, or what did you do exactly?
So for 2019, not 2020 because the season hasn't opened up. Yeah, but for 2019. So it was a lot of good with the bad because we have a lot of business owners out there who maybe didn't really take care of their bookkeeping, and what that leads to is not filing your tax returns.
Yeah.
Right? How can you file your tax returns? You're not going to give them accurate numbers. So a good thing that I did see come out of this EIDL and PPP loan situation is like a lot of business owners are like, okay, I need to get my stuff together. So a lot of them, got their bookkeeping together, got their taxes filed. So yeah, business went up, at least in the tax industry, because those are one of the things that were required if you're at least applying for the PPP loan. Hey, what's your net income or what's your tax return? So yeah, it helped out a lot, and yeah, I did file a lot more, tax returns for that season. Yeah, so to give people their money.
For sure. So my biggest thing is we talked about this. There's going to be so many people who make money as accountants just helping people get their books together.
Right.
Because that's when people there was a stat where 60% of African American businesses did not apply for the PPP, and I was like, some people were afraid, and some people were like, paperwork not in order. That's the number two, reason. So
yeah.
Let me see. I'm gonna get some of y'all questions in here. Jabraz said, if you're a W-2 employee and have a business with a loss, does that reduce your taxable income or how the loss is applied?
Yeah, absolutely. And I usually have my board. I have a board. I don't know if I can bring it up here.
Bring your board. Why not?
Yeah. I don't know if it's.
Welcome to the classy climb. Be flexible.
Can it flip?
It shouldn't bland you out, but if it does, we'll let you know. You guys make sure you're dropping your questions and comments in here. We thank him for his time. So bring your questions in here, you guys.
I don't know. I gotta raise my desk. I don't know if it'll flip. Because typically, sometimes, guys, this camera is like flipped, but
it does the whole Facebook effect. Yeah, I know you're talking about.
So if I can't, but I will try my best to explain it. And you guys, if it's flipped, you're just going to kind of read backwards. So I explain this all the time, and this is another question that I get a lot. So I'm raising my desk right now. It kind of takes a while. Okay. So it looks like it may be flipped. Okay. So if we have, I'm going to test it right now. Can we see it? Can everybody see this okay?
Everybody drop a 1 in the comments if you can see the board. I'm pretty sure I can see it, but yeah.
Okay, it looks like it's good. It looks like it's not flipped neither. So I want to walk through. So that's a great question. Okay. So the neat thing about having a business, and guys, you probably heard about this if you heard anything about Trump's tax return, how he was made so much but didn't pay taxes. It's something called a net operating loss. And let me get this on here. Okay, so if you're a W-2 employee, and so let's say your W-2, your W-2 wages, and I'm just throwing this out the air, were $100,000. Okay, $100,000. Okay, and let's say you're just in the, I'm just going to throw a number out there, a 40% tax bracket. Okay, so 40% tax bracket. You're going to have to pay $40,000 in taxes. Okay, so that's just a simple one. Now, the neat thing about having a business, and this is what I was telling you guys early in the beginning about the unemployment thing, is that you can actually use your business loss to offset other income as long as you're taking legitimate business deduction. This is why bookkeeping is really important. So let's say you have a business And more than likely, you're going to file a Schedule C to report this business loss. So let's say your business loss was, I don't know, $50,000. Okay. So let's say your business loss was $50,000. Okay. So now what we can do, we're not worried about this anymore. We can use this business loss to offset other income. So now our what we call taxable income. Now our taxable income is $50,000. You see that? We had total wages from your W-2 job, which is $100,000. You had a business loss of $50,000. Well, those two offset each other. And so, now we're in a lower tax bracket. So maybe we're in a 20% tax bracket, right? So now the taxes that we have to pay is what? $10,000. So by having that business loss, you just saved, $30,000 in taxes. So that's pretty much how that works. I probably spent longer answering that than I should.
No, you're fine. I like it.
Feel like I had to explain that because that's the best way I like to explain it. Yeah. So if you're a W-2 employee, you have a business loss, you can use that loss to offset other income. Right?
I really like your reaction video to the guy who's like, yeah, write off everything.
Yeah, that was ridiculous. That dude was ridiculous. That's hilarious.
I love it because that's what happens when people start talking about taxes. I'm like, you guys, if you aren't certified in anything, please don't do that.
Right. Yeah.
Right. So what are some things you'd love to really get people educated on this year?
Bookkeeping. Please take care of your bookkeeping. That's the number one thing. It'll make your tax preparation a lot easier. If you decide to work with a professional, even if you decide to work with me or somebody else, it's going to make their fee, your investment in their services, a lot cheaper because they don't have to go through your books and things like that. As far as tax saving, tax strategies, of course, research that. But really, what I want you as a responsible business owner to be taking care of is your bookkeeping. So maybe you have to invest in a bookkeeper or some QuickBooks Pro advisor. That's what I would like to see more business owners get educated on. And I know it's draining. I know it can be a lot, but it'll save you so much more in the long run. So please, bookkeeping.
So how much is the average bookkeeper per month, or just in your area of Dallas, if you have to?
It could start around 200.
Right.
200, yeah.
Yeah, at this point, I dumped so many companies on this one company. They're like $1,000 a month, ma'am.
Yeah.
Get out of here with this craziness.
It can get up there. Yeah, it's an investment.
Part of what I love about QuickBooks is I keep telling people that QuickBooks do loans based off your income, or income streaming through the business. QuickBooks has a lot of great attributes to it. And I keep telling people, print off a P&L, print off a balance sheet. You're going to get much further with the bank than with those. But Tia Griffin asks here, in your broad example, when you ask the banks for loans, will they consider your W-2 income as $50K now? If you write it off, in your
So it depends what type of loan you're asking for. So that's the thing. If you have a business loss, if you're asking for a business loan and you have a business loss, then no. I mean, they're not. You got to show a profit on there. So if you're asking for a loan, typically they're going to look at your taxable income. So even if this is coming to a house, so typically they're going to look at this number, like taxable income. But if you're asking for a business loan, you better show a business profit. You just ask yourself, would you invest just for a business loan that's operating at a $50,000 loss? So you see, there's a good with the bad. So there's a lot of people out, or a lot of clients that I have to advise on because you want to show a loss, because with depreciation, we can show it. Depreciation is a great thing to take, but it may not make sense because you may have to show a profit on your Schedule C. What's really important, I'm from Dallas, thank you. What's really important is, hey, if you're going to buy a house and your main income is from your self-employment, I know you want to save on taxes, but at the end of the day, you're going to have to pay those taxes to show that profit.
Yes.
Right, and some banks require 2 years of consistent income. So really, when you sit down with a tax professional, they should be asking you these questions. What are your goals? So because with depreciation, you can either write the whole thing off, or you can write it off in chunks. So if I'm speaking with a client that's going to buy a house soon, okay, we need to take the depreciation in chunks so we can show a profit on your tax return. So so when it comes to a loan, you really want to focus on your goals. Is it a business loan? Is it a house loan? And so forth. Yeah.
I'm like, let's get in the house first, then write everything off, right?
Once we get in the house, it's over with. Once we get in the house, let's depreciate all that. Yeah, I have a client going through that right now. Once she gets the house, it's over with.
She quitting everything. Well, you know what's crazy is I have this one guy, he's posting, I'm quitting my job November 20th. Right. And I'm like, bro, wait, you close on your house November 1st. Be quiet. Do you close?
Yeah, get in the house first.
They're going to look on your social media.
Right. That's hilarious.
Yes, you guys, he is in Dallas. Someone asked, what was your IG? Can you say your IG one more time?
Duke Alex Moore _. Yeah.
Duke's Alex Moore _. And do you have like a physical office they can visit you, or is it you do most of your stuff online?
Yeah, I'm just
because I know right now
100% virtual. I do have an office I used to meet clients at. It was a virtual office, but 100% online. It's very convenient. I'm gonna get a lot more done. So yeah, just like this.
Yeah. So are you getting what type of clients are you seeing right now?
I'm seeing a lot of. I'm seeing actually new industries. So I'm seeing like I have a balloon client. I have someone who's a nonprofit. Really, the type of clientele that's coming to me right now, or the typical pattern is they're nervous about the upcoming tax season because they have not done what they're supposed to do throughout the year, and they hear all these things. So really how I can describe the clients that I'm receiving now is people who want to get their books in order. So to make tax time a lot less stressful. So that's another service I offer. So, QuickBooks setup, QuickBooks cleanup. That's the type of client I'm seeing right now. Then I love that they're taking care of this before tax time. Sometimes people like to wait at the last minute. The longer you wait, the larger the investment's going to be, and the lower quality you may receive, or the person you may work with is too busy. So yeah, that's the type of clientele I'm seeing right now.
And so what are some of your thoughts on all the PPP, like crazy fraud stories we've been seeing, especially in Texas, the Lambos, the people partying? Right. Just what are some of your feelings and thoughts on that?
It's crazy, guys. And, it's just like, I know it's for one thing, it was too easy to get. Anybody could have got it. There was no verification process. But, the one last person's money you want to mess around with is definitely the federal government's money. Yes. They have checks and balances. It's crazy. I just got off a class today with the IRS. They're increasing their investigations and all of this. And so what they're doing right now, and just so you guys know, they're hitting large people, big people, with the efforts of putting it into the news. So the people who, are kind of like, they want more awareness that, hey, we're cracking down on this, giving you the opportunity to start paying that back. So that's what I just got off from the IRS webinar today is, hey, they're cracking down and they're hitting the big people first. So it hits the newsline story. And hopefully people start voluntarily coming forward before they pursue things. So guys, if you're one of those people, just go ahead and try to pay that back as best you can. So yeah, that's great.
I kind of felt like that was what happened to Wesley Snipes. I'm like, y'all could let him do a payment plan. They're like, no, you're going to jail.
Right. Yeah, they love setting example. And
they're saying you're straight dropping gems in here.
I appreciate it.
They're like, perfect info. Thanks. This is really great information. Yeah. One of the best ones was like the one group that did like 109 applications. It was like a group of 10 of them.
Right.
And I'm like, don't you think the same IP address falling up every time is gonna like hello?
Right.
It just cracked me up in here.
Thank you, Nerdso.
There's some more questions in here. Okay. Nerd Soul, hey, how you doing, man? What's up? We're gonna eventually get him on here with his YouTube channel. If you could, I said, if you had a 7-figure gain from your business, what are some ways you could offset taxes, etc., assets to depreciation, or what?
Okay, so when we speak gain, I'm not sure if it's a profit or gain. So the difference between a profit and a gain. Profit is something you have profitable in your business. You sell something, you have expenses, you have a profit at the end of the day. If you're talking about a gain, that's typically because you're selling like some type of asset, like stocks or yeah. So you're selling something, like, or you're doing real estate. So if you're talking about gain, like which is called a gain, you're gonna have the easiest way to reduce your tax liability when you have a gain is to hold on to your assets for at least a year. And I'll explain that real quick. So, and you hear about this all the time. Hold on to your assets for at least a year, your stocks, your real estate property, things like that, because if you don't, let's say it's called ordinary income. If you don't hold on to your assets for at least a year, and you have what's called a gain, that's what's called a short-term capital gain. That's what they're going to call it. It's a short-term capital gain, and that gets taxed at ordinary income. So let's say less than 1 year. All right, so that's going to depending what tax bracket you're in, that's going to be taxed at around 10 to 37% if you have a gain. If you held it for less than 1 year, guys, if you can hold that asset for let me see, more than 1 year. If you can hold that asset for more than 1 year, you're going to be paying 0 to 20% on taxes. 0 to 20%. That's what a lot of investors do. They hold on to their assets and then they sell. So if you're talking about the gain, that's one way you can save on taxes. Another way to offset gain is you have other gain losses. So let's say if you have, like you sold something for a gain, but you also lost something for a gain. You can use that to offset each other. So, and if you have a seven-figure profit from your business, the easiest way to offset taxes like that is, throw some assets in there. Buy you a vehicle. If the vehicle weighs more than $6,000, I mean, there's certain things we can take. And I may say words that's foreign right now, like it's called Section 179 or bonus depreciation, which allows you to write off the thing 100%. So you can depreciate that if you have that profit in the business. So that's what I'm doing with a lot of my clients right now. We're looking at, hey, what are you going to owe? If everything remained constant, the net profits at this, what are you going to owe? What can we do to reduce that tax liability? Okay, if you have the money and you need it in your business, go buy a truck. So I have a client right now buying a $60,000 truck. We can use that to write that off.
Do I need to buy that truck before what time frame?
So it has to be placed in service this year. So what bonus depreciation allows you to do, and it can be new or used property used in your business. If it meets certain criteria, guys, do your research, talk to a tax professional, but I'm just dropping you a basic line. And so you can just understand. If you place a property, whether it's used or new or used in your business, you can write it off 100%. Because typically you cannot. You have to do what's called capitalize. So there's a lot of people who get in trouble because they think I bought a $40,000 property, I can write that whole thing off. Absolutely not. You have to write it off, depreciate it, or capitalize it on your balance sheet, and then you have to write it off in segments. What bonus depreciation allows you to do, you don't have to write off in segments. You can just write the whole thing off if you meet certain criteria. So if you have a seven-figure profit from your business and you need assets in your business, definitely recommend you to depreciate that. Or another thing you can do if you're a cash-based business, stop collecting money from your clients. Just say, hey, pay me next year. So give them that time frame. Like, hey, holidays are coming up, guys. Don't just pay me next year, right? What does that do? That reduces how much income you're reporting for the year. You can push out. Then you collect the money next year. But if you collect the money this year, you're gonna have to report it this year. So hey, just give them a little. Hey, pay me in 60 days. They pay you 60 days, and you can start right there. So that's another way.
The funniest thing about what you just said is Cardi B went viral tomorrow. If you owe me some money, don't pay me the next year. And everybody was like, why is she saying that last year? And it was very much an educational moment, like, y'all, because she went to the taxes and they told her how much she was about to pay.
Right. That's
Right. And then thank you, Nerd Soul. Am I shiny, y'all? I tried to wipe some of the lotion off, but okay. Short-term versus long-term capital gains, yes. Right. FYI, day traders are doing short-term gains. Right. Yes, they are. Good evening, Black Caesar. Good evening. If you held for a year, would opportunity zone investments also help to offset gains? Yeah, so opportunity zones is a very complex topic to cover, but what it allows you to defer taxes up to a certain amount. So up to 10 years, if you play it correctly. I'm not really too experienced on that to quote on that. If I feel like if I gave you information on that, I could be doing you a disservice because I'm not 100% and right. Anything, but yeah. He said, push out them invoices, push them out. Hey, man, guess what? Have a Merry Christmas. See you January.
Right.
A jet like Grant Cardone. Yeah, I think sometimes people think I'm writing everything off, and I'm sorry, if you have $1 million business and then you only have 35,000 left at the end of the year, you're not really qualifying for many things.
Right.
So that's
Have the ordinary necessary.
Yeah. Anybody else? Bring your tax questions in here. I have some stuff I'm checking. Someone asks, is Forex trading also considered day trading?
Yes.
Yes. Okay. Let me see here. Someone said, Allison Thompson, if you swing trading, are you not able to take profits within the year in order to avoid capital gains tax?
Yeah, so pretty much how capital gains tax works is, look, if you held it, you're going to have to fill out Form 8949, and it goes to Schedule D. The basic rule, if it's less than a year, ordinary income. More than a year, you sell it, capital gains. That's long term. So you have short term and long term. So yeah. The form you fill out or the service you use to tax professional that you work with, they should know that. The only thing that you need to take care of, Allison, is to make sure you're documenting it. Make sure you have a form to give them. So how it's going to ask you what type of property you have, the date you acquired it, the date you sold it. If you're using a software like TurboTax, which I recommend, they'll take care of all that for you. If you're using a tax professional, just hand that over to them.
Someone said, how can loans receivable offset your tax liability?
Loans receivable. So loans
accounts receivable, or
so maybe accounts receivable, because loans is never considered income, nor is it considered an expense when you pay it back. So let's say you have a car payment, that's not considered an expense because you never recognize the money received as income. Accounts receivable is not going to offset your tax liability because accounts receivable, if you're in accounts receivable, only if typically you're on an accrual basis. So that's why I mentioned before, if you're on a cash basis, you can do this, because with the accounts receivable, if you're using a service like Quickbooks, as soon as you create that invoice, it's going to your sales. It's going to be included in your sales. As soon as you create that invoice, that's what accounts receivable is. It's as soon as you create that invoice, it's sell. If you're a cash basis taxpayer, as soon as you receive that money, you actually get it inside your bank account. That's when you recognize it. So accounts receivable, using something like accounts receivable, it's a little bit more difficult because as soon as you create that invoice, it's considered sales.
Okay. Look, see y'all. Come with these good questions y'all be having.
Right.
Okay. S&S Consulting Company said, is it better to pay your taxes quarterly or annually, as she would say in her voice?
All right, absolutely. So here's the thing. First of all, if you last year when you filed your tax return, so if you filed your 2019 tax return and you owed $1,000 or more, so if you filed your tax return, you owed $1,000 or more, you are required to pay your taxes quarterly. So that goes without saying. If you owe $1,000 or more, you're required to pay your taxes quarterly. Now, if you didn't, I still always recommend to do it quarterly. If your net profit is around $1,000 a month, I would advise you to start submitting your taxes quarterly. It's very simple to do. You're going to go to irs.gov /payments. You're going to enter your information, and now you're going to put, hey, I'm making an estimated tax payment for this tax year. So once again, that's irs.gov /payments. It's an easy way for you to make your estimated tax payment. So I always recommend quarterly. So great question.
Let me tell you, I overpaid, and they were like, "Come get your money." Like they sent it back. Like, get that back up out of here.
Right.
So that does happen.
Right.
Let me see here. What's our next one? Okay, this guy said this.
If I give a loan and then they money paid. So if you give a loan, it's not considered income because it's not an expense when you write it off. So think about this. When the only thing that you're going to have to report on income is you better have charged interest if you're giving someone a loan. The only thing that you're going to report as income is the interest. If you give someone the money, it's just a transfer money. So if you think about it logically, how we have to pay taxes on our income, you have a minus 20 and you have a plus 20. It's going to zero out anyways. The only difference is that interest. So if you charge interest and they pay you back, that's what you're going to have to report income on. But if you give out a loan, they're paying it back, that's not income at all. Only the interest you charge. Now, hopefully you are charging interest. That's what you're going to include as income. Right. That was a great question.
Okay. I haven't filed my business taxes since 2018. How much trouble am I in?
Well, it depends if you owe or not. If you don't owe nothing really, and you have 3 years to collect your refund if you are due a refund. But let's say your business taxes, I would really strongly advise you to, get those filed. What's considered compliant to the IRS, guys? Just so you know, what's considered compliant to the IRS is your last 6 years tax returns are filed. If your last 6 years of tax returns are not filed, you are not compliant, and they can issue out, notices and things like that, especially if you have someone reporting against you. So follow those. The only thing you're going to do if you don't owe, set up a payment plan. It's called an installment agreement. They're pretty easy to qualify for if you think you owe. Get your books together. That's what I really recommend. Most business owners I see don't file if they don't have their books together. Or they're afraid they're going to owe taxes. So get those taxes in. So when you don't file and you owe, you're going to be charged a penalty. And the penalty for not filing is much worse than not paying. So even if you cannot pay your taxes, I don't care if the tax is $10,000, $1 million, file your tax return, because it's so much more worse to not file a tax return than to not pay your taxes. So even if you think you're going to owe, please file that tax return, because that's what they're looking for.
I was going to say, a lot of YouTubers got on the phone with me and were like, hey, they stopped giving me my Google AdSense. I said, why? What happened? IRS said I didn't update the form on the website. And then a lot of people, this is their first time owing $25,000. Like they made 100 racks off YouTube and they're like 25%. And I was like, that's because you put it in your personal. You did not put it in your thing. Right. Also, she said, is that for personal or for business or for both?
So it depends how your business is structured. Okay? So you have sole proprietor, you have the LLC, which is taxed as a sole proprietor. You have an LLC taxed as an S corp, and you have a partnership. You have a C corp. So most of you guys are going to be what's called a sole proprietor. Even if you have if you are the only member in your LLC, you're a sole proprietor. If you are a rideshare driver, you're in the gig economy, that's going to be a sole proprietor. And how sole proprietor files a tax return, they're going to file a Schedule C. Okay, so the name of your tax return. Okay, so it's going to be called a 1040. 1040. That's the name of your That's going to be the name of your personal tax return. So 1040 is a fancy way to say, hey, this is your personal tax return. Now, if you're a sole proprietor, like I just mentioned, you're a sole proprietor, you're a single member LLC, like you own an LLC, you're the only owner, you're going to file a Schedule C. You're going to file a Schedule C, and that gets attached to your personal tax return. So if you're a sole proprietor, once again, single member LLC, you file your business taxes with your personal tax return. And it's if you think about a paper, you have your personal tax return, and all you do is staple your business. It's a business form. It's going to be a Schedule C that you file it. So and it's for both, to answer your question. So great question.
I love it. A little late, so I'll watch the replay. I know it's going to be fire. Much love, Erica, and I hope Skynet lets you live. Thank you. Skynet, you're trying to get me. What's up, Andre Hatchett? How are you doing? Black Hempster said, I am buying cars cash for my Turo fleet. Should I loan my LLC the cash and buy the cars, or just buy outside the business and transfer title?
Okay, so that's a great question, but probably someone who specializes in business and those acquisitions can better answer those questions. I specialize in federal taxes and QuickBooks. But to answer your question, for at least on the tax side, it does not matter whether you purchase the business in your name or the business name. You can still deduct it on your tax return. It doesn't matter which title you purchase it in. I would love to give you advice on that, about how to purchase a builder, whether to put in an LLC, whether to do it like that. But it's probably a question more for an attorney to take care of that. But at least for the tax purposes side, it does not matter whether you use your name or use the LLC's name. Most of my clients use their name or their business name, doesn't matter. You can still deduct it on your tax return. So yeah.
I'm gonna say, as we say on this channel, CYA, consult your attorney, consult your accountant,
Right.
consult all those people, right? SNS said, let me just go ahead and schedule an appointment with you. I think I have your information for my assistant, Savannah. If I don't, feel free to say it right now. Like, go ahead and say your information one more time.
So yeah, you can email me. Typically, I check those emails.
And we got a good question.
Ever since the TikTok thing, I stopped getting out my number. But yeah, Duke.
Oh, I know that TikTok number thing probably went crazy.
Duke at duketax.online. So it's Duke. Let's get this over. It's Duke at duketax.online. That's my email address. The website is simply duketax.online. So you can shoot me an email, Duke at duketax.online. And then my website is duketax.online. There's a contact form there. Okay.
Love it. Just guys, look it up with him. So we got the most important question of the night, the Donald Trump question now. Oh man, you should have just left it up there.
Oh.
No, don't worry. I'm gonna type it in the chat. Duke at Duke. I'm gonna type it in the chat. Tax online. All right, you guys. I put it inside the chat. Mr. Madu said, "How can I pay that $750?" That Mr. What we call him, Donald Trump, $750.
Get started with bookkeeping.
Boom.
Bookkeeping, and then your bookkeeping to what's called tax planning. Simple. If you have those two structures in place, bookkeeping. So how Donald Trump pretty much played that, it's tax planning, really. You consult with your tax planner throughout the year. This is not something you just sit down one day of the year or something like that. It's like, hey, how can we? It's a strategic approach that you take all throughout the year. So like my clients right now, let's say I have one that's about to owe $18,000. So hey, let's buy a truck, let's do this, let's do that, and this could eventually lead to a refund. Right, but we can't do this at the end of the year. And we cannot do this if we don't take care of this bookkeeping. So get started with bookkeeping. They consult a tax professional, or something like that that can help you put these plans in place and do it throughout the year. Tax planning is 365 a day. It's like working out, but for your business. So tax,
Hello, Miss Denson Construction. Everybody, drop your questions in here. While we got him, he's a busy man. He's got his live he's got to go to in a little bit.
Right.
But I just want to say, what they gonna do if you got 55,000? I'm just saying for a friend. They owe 55. What we gonna do?
They owe 55. Hey, they need
to have 55,000 down.
Put some assets into the business. Let's do some depreciation. Let's
we about to get a Porsche or something. We about to go. I was like, what can I buy? Somebody help me.
Right. That's hilarious.
Again, she said, what up, though?
What up?
You guys can connect with him at.
Right.
Bring your questions before we let him go for the day. So with so many people, part of my thinking is so many people are like, they home, they working from home. Are they going to be able to write off that office they had to create?
Yeah. No. So if you're a W-2 employee, there's no, that was disallowed in 2018. Unfortunately, it was. So the best way to save, guys, on taxes, the easiest way to save on taxes is start a business. Start some type of side hustle. Start something. Your tax deductions, it opens your mouth. If you want to, like, hey, now you can qualify for the home office deduction. But as a W-2 employee, the company you work for, they're getting those tax deductions. Everything that you're doing, they're getting those tax deductions. In order for you to get your own tax deductions, start your own business. That's why I really encourage people. It could be risky, it could be scary, but that's one thing I strongly recommend Everybody do. I mean, there's so many benefits to starting your own business. It gives you something to fall back on. It gives you something to keep your mind busy. If you know that hobby you love turn into a business, creates so much more opportunity for you. A lot of people start getting involved with real estate, and of course, you can save on taxes. So, yeah, with that, definitely start a business if you want to save on taxes.
Thank you. Yes, Glenda and Cameron always talk about start a business. Thank you, Tia Griffin, for the $9.99 super chat. Thank you for supporting the channel. Mark A said, listen, if I deposit, and I'm gonna wrap it up here with this, you guys have bring one more question, make it a good one. Mark A said, if I deposit cash in my business account from my personal account for advertising and marketing expense, do I have to pay taxes on that?
No. So if you're a sole proprietor, same member LLC, you do not have to pay taxes on the money you put into the business, right? So that's what you're going to call, if you're doing your bookkeeping, it's going to go to your equity account as the owner's contributions. Now, the adverse side is that if you take money out your business, let's say you take money out your business account and move it to your personal account, that's not an expense either. So the movement between your personal accounts and business account, if it's money going in, you don't have to pay tax on it. If it's money coming out, it's not an expense. So hope that answers that question. Hope that helps, Mark.
My app said, are you more exposed to an audit if you start an LLC and show loss since year one? Is it going to cost me money to capitalize?
Love how you ask this question. So, my apps, the general rule, what the IRS looks for is for you to show a profit in 3 out of your first 5 years.
Yes.
So that's what's really important. And here's the thing. It's not the purpose of an audit. The simple purpose of an audit is to make sure you're paying the correct amount of tax. So sometimes an audit leads to a refund. Sometimes an audit leads to being taxes owed. That's the purpose of an audit. But if you're showing a loss, that's okay, But let's show a profit in 3 of those 5 years, because the only thing that's going to happen is the IRS is going to say, you know what, this isn't a business, this is a hobby. So so all of those expenses that you were taking, they're going to disallow all those expenses, which is going to increase your taxable income. So guys, there's a big difference from having a business and having a hobby. And and unfortunately, guys, if you're losing money 3 years, 4 years in a row, maybe we need to switch it up a little bit. Maybe we need to try something new or go into another business because this is not working. That's where you kind of show that, hey, this is a hobby and not a business. So that was a great question.
The best thing I will say as demonstration is Omni and a Hellcat.
Right.
Do not be out here every year buying 24 cars and your business taking a loss every year.
Right.
I think they'd be watching the internet. Of course, they said, what's his contact info? I did put it in here again. It's duketax.online.
Thank you.
Thank you so much for coming in today. I really appreciate it.
Right.
Because I just think it's, super important that people, I've been yelling for a year and people tired of me right now. Bookkeeping.
Absolutely.
Books, so, right. But yeah, share all your handles with us again.
Yeah.
So guys, check them out on TikTok. Start with TikTok.
Yeah. So my TikTok, that's where I'm most known at. That TikTok is at Duke Alex Moore. So that's gonna be most of my handles. So guys, and I'll be on TikTok in about an hour doing this once again. That's how I usually typically end my days on TikTok Live answering questions. So most of my handles are Duke Alex Moore. The only one that's different is Insta. And it's the same thing, but it's just an underscore. Right? It's just an underscore. Yeah. So Duke Alex Moore. That's all my handles right there.
I love it. I love it. Thank you so much for coming on. Someone asked me about my student pilot license. Hey, you guys, I'll do a whole video on me flying planes. Somewhere I got to get a break and a vacation somewhere. So looking for a write-off before I fly to Cayman. Yeah. Thank you so much for coming on. I really appreciate it. And for those of you who are in the rise of 20%, we might get him in over there if he has time. He's a very busy man out here. Roth Real Estate said $1 profit. It made $1. Thank you so much. And again, they're saying great gems. Thank you guys for coming on. But yeah, thank you for your day. Thank you for your night.
Thank you so much.
All right, later.
Later. See ya.